I think this space is going from 2.5 trillion to maybe 12 trillion this cycle to 100 trillion by, let's say, 2032.
Meme coins drive trading volume on Solana. A rise in Solana prices raises questions about when the cryptocurrency will reach a new all-time high. A slew of joke-inspired coins that have seen extraordinary gains in recent months are helping fuel Solana's surge in activity. Traders use Solana to purchase and trade meme coins, generating fee revenue for the Solana network. Meme coin traders like to use Solana because of its speed and low transaction fees. Market analysts say Solana has a 61% chance of reaching all-time highs before Ethereum's native cryptocurrency Ether. And its growth won't stop there, according to market observers. In today's video, we will tell you Raoul Pal's view on Solana, as he says that it's the best time to 100x your money with Solana. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. It all depends on the economic cycle, and everything is correlated. Something leads, cryptocurrency and technology lead. As the business cycle bottoms out, the ISM hits 50 commodities and the cyclical play comes into play. Things are lagging behind real estate and such, but either way, the business cycle rules all. Everything is highly correlated. Everything is governed by the code of everything. So the dirty secret is that it's the simplest game in the world. Simply divide all asset prices by each other. Look for the best performing asset. If I divide the S&P by crypto, it drops 99.98%. If I divide gold by Bitcoin, then 99.99%. If you split oil stocks, if you split emerging markets, if you split global stocks, 99.9% of them have all fallen since 2012 against Bitcoin and tech. The secular bull market that made everyone a fortune, a drop of 99.93%. So everything drops 99.9% over time compared to cryptocurrencies. Cryptocurrencies are the best performing asset in the world. 3 years out of 4, the fourth year, it's the worst performing asset. Then it's the best performing asset for 3 years. And finally, it's the worst performing asset. It continues. Bitcoin, even with 3 or 4, 3 draws at 80%, around 75, whatever the average is, still got an annual return of about 140%. You can own any venture capital fund. You can own any other asset class, and nothing comes close. 20 million returns since 2012. Bitcoin has returns of 450,000%, but Ethereum came a cycle later. Ethereum has an annualized return of around 165% compared to Solana's annualized return of around 200% because it exists less early in the network effect. When you have the best performing asset class of all time, the fastest adoption of any technology outside of AI, and the largest and fastest wealth generation in the shortest time limit, why wouldn't you be involved? All you are doing is helping yourself to disappoint your future self. An asset is future consumption deferred later, and you want your assets to be worth as much as possible because you're taking risks with that money by locking it up. You should therefore be compensated for this risk. Your future self will disappear. Bitcoin is now up 20 million%. Thanks, Bright. You can buy a house, take a cruise around the world, or buy a mega yacht. Gold is doing very well when it comes to degradation. It just doesn't make you rich. It is a fantastic heritage preservation tool. Bitcoin or blockchain is crypto. That's it. That's because that's all you're trying to do for yourself, which is to convey your vision to your future self or what you would like. And technology does it very well too. This space will grow from 2.5 trillion to perhaps 12 trillion over this cycle and 100 trillion by, say, 2032. That would be the largest and fastest accumulation of wealth ever. We're not going to talk about the NFT thesis, but it's based on this thesis that trillions of dollars of new wealth will be created, which will be the largest amount of new wealth created in all of history. This is twice the size of the S&P 500's 100-year wealth accumulation. So it's the same as the S&P's 100-year wealth accumulation, 25 billion. Half the amount the entire US economy had generated in stocks over the past 100 years. Macro summer, crypto summer, we are in the phase where Bitcoin is having the central bank wants to cut rates even if inflation is not playing this game. And then we have the weekly global liquidity index of the global stimulus cycle, which is increasing. This is when liquidity begins to increase significantly. The Europeans will start to reduce. We are going to see nations cut off from the world. Latin America was the first to start an increase by removing Brazil. Next, we will see the cutting cycle. the global reduction cycle will accelerate. We have China with a very poor economy. In fact, it is a deflationary debt trap caused by population aging and excess debt. We all know these things because we all live in one country, whether we live in Europe, the United States, or Japan. Then they will stimulate more. The Japanese intend to raise their rates but continue to apply a negative interest rate policy. In real terms, inflation is expected to continue to fall slowly. The Federal Reserve wants to lower rates because, for the code of everything, the Everything Code basically suggests that they should use the cash to monetize the interest payments on the debt. We are facing interest payments. Now the bond market is panicking, obviously, because it's working. How can we pay for all of this at 5.5% rates without issuing more and more debt? Gold markets exploded as a result, and it should be because the answer will be that they will have to use cash. Will they resort to quantitative easing? Probably not, because we all know the trick and we know the name. So what will they do? First, they run the reverse repository. It doesn't matter what the format is, but they reduced it, which means that the banks injected money into the market and then they proceeded. They continue to carry out quantitative tightening, but they are already talking at some point we should stop this. Of course it is because the repos are almost empty, leaving the Fed with no opportunity at the moment. The next part is, what is the Treasury for? Because now the Federal Reserve is just helping the Treasury. The public Treasury has set up its general account, that is to say, its bank account, and then what they will do is start to reduce that during the elections, that is liquidity flowing into the system. We have tax season, and a lot of times it takes money out of the money markets and then goes into the Treasury general account, and then it's withdrawn. Some think this is bad for liquidity, but at the end of the day, the Treasury general account will be worth $1 trillion, and they will put that $1 trillion back into our hands, and that number will grow. And then every other nation in the world was doing something similar. Then we'll probably have Basel IV, which will happen next year. Basel IV has even stricter standards. This means banks have to use more regulatory capital, which means they have to hold more bonds. Find a way for banks to hold all the bonds so you can contribute to issue them. Everyone does that. So it's about to happen. So we have this whole liquidity event coming up. Then we have the commercial real estate market. Banks are caught in this trap, so we have to play this game too. There are many games to play to get this liquidity, and that's a very powerful backdrop. This macro crypto summer provides a powerful backdrop for assets as you devalue the currency. Assets with network technology and crypto effects, it's macro summer and the debate cycle. However, what's interesting about macro summer is that those of you who don't invest in cryptocurrencies or don't like technology will also get your chance because it's the commodity cycle. Commodities therefore do well during the macro summer and fall. We therefore expect a nice boom in raw materials. Usually value stocks end up doing something. Small businesses tend to do something during this time. That's why it's summer. Living is easy. You can make money with almost anything you own. Even banks go up in summer. So it's a good time for everyone, and whatever your strategy, you'll probably do well. But emerging markets won't do as well because of the dollar. The dollar has been strong during this cycle, and this is due to the interest rate market. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.